For any forex trader actively trading the markets, it's always critical to know what the ongoing trend is, and at least equally so important, if not more, is whether or not a trend exists at all or not, at a particular time. This strategy is designed to give all of this precise information based on which any trader can make a better, more informed and more profitable trading decision. We are going to use 3 popular technical indicators to trade this system: Bollinger Band, Stochastic, MACD. However, we are going to use them in a special kind of way, essentially in a way where each of them confirms the signal from the other indicators and therefore hugely stacking the probabilities in our favor. Of course, as always, we can add support and resistance to further enhance the system. Specifically for this strategy, the parameters used for the indicators are as follows: stochastic period, 5, 5, 3 MACD periods, 12, 26, 9 double Bollinger Band, both of period 20. The deviation of one Bollinger Band, BB, is 2 while for the other is 1. In our examples here on the charts, the black BB is with the standard deviation of 2 while the blue BB is with the standard deviation of 1. If there is no native option to add a double Bollinger Band in your trading platform, you can always add 2 BBs, where one is with a standard deviation of 1 and the other is with a deviation of 2. Entry rules: price needs to cross and trade inside of the upper bands, in an uptrend, or inside of the lower bands, in a downtrend. The stochastic indicator should be pointing to the same direction of the trend as the Bollinger Bands, so it should be bullish when there is the bullish signal of the BB. Preferably the crossover on the stochastic occurs from oversold or overbought levels. The final confirmation is with the MACD, which should also show the same signal. If Bollinger Bands and stochastic are bullish, MACD should show a bullish crossover as well. A same-time crossover on all 3 indicators creates a higher probability of success, and it is preferred that most of the entries to be done under these circumstances. It's also wise that before triggering the entry you switch and look at the lower timeframes to try and pinpoint a better entry price. Often times price action patterns on lower timeframes will give a chance for a better entry. In the following example on used CAD, a same time crossover signaled the start of a nice uptrend that yielded almost 200 pips with this strategy. An example of a short entry and exit on USP 4 hours chart. Managing the open trade, trailing the stop loss. There are no profit targets, only managing the stop loss. Maximum profits are captured by trailing the stop loss behind the band. When the price goes out of the bands, the trend has ended and therefore the trade is closed. Of course, using profit targets based on higher timeframes is a wise thing to do as well. We also exit if stochastic and MACD both crossover even though price didn't close outside bands. This is a precautionary tactic to protect profits. One way to do this is to close a part of the position and let the other one run if you believe that the trend will continue. It's not a big issue if the price trades outside of the 2 bands for a brief time. However, keep in mind that it can also indicate overbought or oversold market conditions. Depending on the context in which it appears, it can be traded accordingly. For example, if it appears at a support or resistance level, then it should be looked at carefully, as a reversal is much more likely. On the other hand, if there is no support, resistance or other obstacles, then it can be false and not much significant. The ongoing trend will probably continue. Double Bollinger Bands are 2 sets of BBs, using default settings set at the usual 2 standard deviation distance above and below the 20 period. Simple moving average line in the middle, as well as a second set of BBs plotted just 1 standard deviation above and below that central moving average. Traders can, and do, tinker with the type and duration of the moving average and the number of standard deviations. The 2 sets of Bollinger Bands create 3 zones, and we will talk about each zone and what they mean relevant to the position of the price movements. We will explain the 4 rules associated with these zones, and how to follow them in order to trade profitably. In a previous lesson, we learned about Bollinger Bands as an indicator that can be useful in flat or gently trending markets, but not during strong trends. Now we will learn about double Bollinger Bands, DBBs. Double Bollinger Bands are a powerful variation on the standard single Bollinger Band, because they tell us much more about momentum and hence trend strength, both in flat and strongly trending markets. This lesson will show that unlike standard Bollinger Bands, double Bollinger Bands are exceptionally useful in strongly trending markets, because they help us to better determine the true momentum shown within the candlestick price action.